This JTS Mortgage Minute is brought to you by JTS & Company Mortgage Professionals.
Good morning, I'm Tyler Farnham. In 2020 and 2021, housing boomed and rates plummeted and at a pace that many consider to be unsustainable. 2022's role is to take things back in the other direction. In other words, things are normalizing after a period of frenzied movement. The normalization process can seem scary in cases where the thing being normalized was exceptionally big, different, and fast. It's safe to say that housing demand, home prices, and rates were all moving in a manner that could easily be described as a big, different, and fast. As we watch the process unfold, it's fair to wonder if it's a sign of more to come. After all, mortgage rates skyrocketed well into the 6% range this month as markets braced for impacts from the Fed's policy announcement. At the time, we were hopeful that we'd just seen the highest rates of the year. Mortgages essentially turn into bonds, and those bonds dictate the rates lenders can offer. Mortgages can only be placed into certain bonds depending on the rates of the underlying loans. One of these bonds, for instance, can take loans with rates at 5.25% to 6.125%. That means the value of a 6.25% loan would be determined by the next higher bond. If investors place a premium on the lower bond, a lender can make more money selling a 6.125% loan than a 6.25%. This is the sort of thing happening on many lenders' rate sheets right now, and it means that it only takes a moderate improvement in the bond market for a lender to be able to offer a significantly lower rate. In some cases, this could involve a borrower paying points, but if you've been averse to that idea in the past, just be aware that now is one of the most logical times to at least see how much lower a point could bring your rate quote. Whenever you're shopping for credit, obviously you want to get your best interest rate, but there's also an APR, an annual percentage rate. What's the difference between interest rate and APR? Both terms represent the cost of borrowing money, but they aren't exactly the same thing. And understanding the differences between interest rate and APR can help you make a more informed decision when you're shopping for credit. An interest rate represents the cost of borrowing money from a lender. It is also used in determining your monthly required principal and interest payments. Sometimes it is referred to as your note rate. An interest rate is expressed as a percentage and is charged on the principal loan amount. Therefore, in terms of mortgages, the interest cost each month is calculated based on the principal balance. That is why paying extra principal each month is so important. The lower the balance, the lower the interest cost. APR is similar to interest rate. APR is a broader measure of the cost of borrowing money. APR includes not only the interest rate, but some other costs too, like lender fees, closing costs, and insurance. The APR reflects the interest rate, any points, mortgage broker fees, and other charges that you paid to get that loan. For that reason, your APR is usually higher than your interest rate. When you consider the APR, you are considering the cost of interest over the term of your loan, as well as any prepaid finance charges that you paid as a condition of getting your loan. If you have questions about APR or interest rate, give us a call. We are happy to explain this further. If you're looking to purchase a home, refinance to lower your rate or reduce the term, consolidate debt, or renovate your existing home, we are experts at matching you with the mortgage that best meets your needs. We look forward to speaking with you and helping you achieve your goals. Remember, at JTS & Company, we are a home loan advisors located right here in your community. We want to be your lifetime mortgage advisor. You can visit our website to get pre-qualified today or give us a call. We are local, trusted, and experienced. Thank you for joining me today, and be sure to tune in next week.
This JTS Mortgage Minute is brought to you by JTS & Company Mortgage Professionals.